This chart shows the performance of my day trading strategy since the start of March. And here is an image that shows the performance of my position trading strategy over the last year. In this video, I'm going to explain how I optimize my trading strategies for maximum performance. All right, let's talk stock strategy performance optimization. I'm going to show you some processes and techniques in this video that I think will help you to be a more profitable trader. Now, I am an algorithmic trader. What that means is I just follow rules. Rules for when to buy, when to sell, and I've computerized those rules so that there really is no room for my human emotion, my human bias in the decision-making process. The results that I'm going to show you today are reliable because they're based on math. They're not based on what I did yesterday, the gut feel that I had on a small number of trades. And I think that's important to understand when we're talking about trading as a profession, is that in order to judge the performance of a strategy, you really have to judge it over a large number of trades. Someone who says, oh, I made $4,200 in the market today, and they show you 6 trades that they made, that's great for that day, but that is a very small sample size. And if you're looking at the results of 6 trades, it could just as easily be market conditions or luck and not necessarily the trading strategy. To have reliable results that you can really gain some insight from requires that you look at hundreds or even thousands of trades so that you can see how something works over time. And again, sample size, I would say, is at least 100, but it really should be hundreds over different market conditions. How does the strategy work in an up market, in a down market? Does it work in streaks, or has it got a lot of volatility? These are some of the things that we want to look at when we talk about reliability of data. So I'm going to show you how I collect data. It's all computerized. There's no human bias. Let's do that now. I'm going to jump over to TradeStation, which is the platform that I use. And what you can see running right now is my strategy running in something called Radar Screen. Now, it doesn't matter if you use TradeStation or not. What this is basically showing is real live market conditions. The market's open right now. It's currently 12 o'clock Eastern time, or just before. And this particular screen shows all of the stocks that have met the requirements of my strategy so far today and the time that they triggered the alert. So if we look here at NVLN, which is the best winner of the day right now, it triggered the alert at 9:50 a.m. Eastern time. Now, that is not me doing anything to determine this. It's just the computer's been programmed to find these strategies. Now, this column right here where it says RR, that is reward for risk. I'll explain what reward for risk is in a moment, but this particular stock has currently sitting at a reward for risk of 15.3 RR, and you can see that that's changing in real time here. Now, if I go down to the list to where the day started, you can see some of the other stocks that triggered so far today and their reward for risk. Now, some of them went up and they've come back a little bit. Some of them are still fairly strong, but overall the net reward for risk of all of these trades is positive. And I know that because just before I did this video, I added them up and they were up a number of reward for risk elements. Now, let me explain what reward for risk is. If we jump over to the chart of one of these stocks, let's actually do AZN just because it's a little bit easier to see. So AZN, which is AstraZeneca, triggered my entry signal at 9:34 a.m., right where I've got my mouse right now, 9:34. And it's hard to see, but there's a little pink dot right by my mouse arrow, and that pink dot represents my action candle. Now, the risk of the trade is the difference between the closing price of that 2-minute candle and the low of that 2-minute candle. So we call that the risk. And then the reward is the multiple of that risk amount. And so you can see that after the entry signal, the stock moved higher and it topped out at just over 7 RR. That means at that point it was up 7 times the risk. Now the risk on this trade was 16 cents per share. And the reward currently, as of right now, is, we look at where my mouse is, at about 4 times risk. 4 times the risk you took is what the reward is. So if you took $100 of risk on this trade, you're currently sitting with $400 of profit. If we just pull up another example, NVLN, as an example, NVLN. So its entry candle was at 950, which is right where my mouse is, and it's been going up quite nicely. It's starting to come off a little bit, currently sitting at, what is that, about 14 times risk. So again, if you risked $100 on the trade, this trade is currently up $1,400. And if we go back to this screen, you can see NVLN is sitting at 14.5 RR, and AstraZeneca, which is right there, is sitting at 4.25 RR. So that's how I measure the results. And each day, at the end of the day, I run some processes to grab every stock that meets the requirements of the strategy. And we put that into a spreadsheet. All right, so the spreadsheet looks like this. You can see there's all this data in here. Each one of these lines represents a trade that met the requirements of the rules. Now, not every stock triggers an actual trade, and I'll explain why in a moment. For now, just see that there is thousands of lines. In fact, we have 43,259 there. Many, many lines of data. And so I can go up. These are all the trades from November 7th, and I can go up, and only those that have a number here actually qualified as a trade. Now here's why. We have other rules, right? So these are all the stocks that met the basic criteria, and that is they made an action candle. But the action candle is only one of the rules in the strategy. We have others, and they have to trigger those other amounts or rules. And this is where we can start to play with the strategy rules to optimize the performance. In order to optimize the performance, we can do it in 2 different ways. We can optimize based on maximum profit, or we can optimize based on the maximum average profit per trade. Now, what you choose to do is largely dependent upon how many trades you want or can make. If you can only make 5 trades a day because of limited capital, or because you're not, fast in entering your orders, then you're going to want to optimize the average profit per trade. If you are more like my style, where I try to do as many trades as I can, maybe 30 or 40 trades a day, I want to optimize the maximum performance. In other words, the approach that gives me the maximum total profit per trade, or in trades overall for the day. So let's go back to the spreadsheet here and just start playing with the settings for the strategy. Now, I'm going to explain what you're looking at. This is the month of March. This is the total RR for the month. This is the number of trades for the month. And this is the average RR per trade. So there was 508 valid trades. That's both long and short. And they totaled 617 RR. And that was an average of 1.21. All right, there was 185 long trades, and there was 323 short trades. It was a bit of a correction in the month of March. Now I can start to play with the settings to, perhaps try to get the average higher, or to maximize the total RR. So let's go in here, and for example, if I wanted to maybe improve the average RR, but lower the number of trades, I could increase some of these indicators. So I could say VSIG, which is one of my indicators that goes into the strategy, stands for volume significance, and price SIG, I can increase those to 2.4 for the long side. I could do the same on the short side, 2.4, 2.4. Now, doing this essentially means that the rules are more strict, and so you can see now that the number of trades has gone down. It's now only 377 trades, but the average per trade has gone up. And so I can continue to play with this. I could leave the long at 2.4, because that raised its average to 0.84, but let's see what happens if I take the volume significance back to 1.95. Currently the average is 1.58. Let's make this both 1.95. And that changed the average to 1.59. So it didn't really help my average, but by lowering the value, I increased the total number just simply because I took more trades. Now I've got a number of criteria here that I can play with. One is price. One way to shorten or reduce the number of trades you make in a month is to limit the price that you look at. So let's say I only wanted to do 10 trades a day. That's about 200 trades a month. Well, right now for the month of March, there was 461. So why don't we get a little more strict with the price range? Instead of being 1 to 10,000, let's do 1 to 40 and do the same on the short side. I don't short stocks under $3, so we'll go $3 to 40. So what that's done is it has reduced the number of trades. Now we're typically around 200 a month, which is about 10 per day. My average is still very nice, 1.32 per trade, and my longs average 1.23, so that was quite a bit better than what we saw before we changed price. And my shorts actually went down a bit. Okay, well maybe I want to choose a range of stocks between $20 and $60 on the short side. What does that do to my average? It was 1.3. Oh, now it's 1.48. So because I've got all of this data to work with and this ability to change values of the indicators that are part of my strategy, I've got these rules. Each rule is based on an indicator. I can change the values of that indicator, even if the indicator is simply price. And now I can start to manipulate my data to identify, or really manipulate the rules based on the data, so that I can get the highest average profit per trade or the highest total profit, depending on your goals. And so that's how I optimize data. Now, in order to do that, you have to have data, and it's quite a time-consuming process. I spend 30 to 60 minutes every day collecting my data, and that's actually not a lot of time when you consider what's actually going into that. The computer is doing most of the work. I look at every stock that trades on the US market for my day trading strategy. The computer goes through, it finds every stock that triggered the basic criteria, which was the action candle, and then it evaluates each stock on those different indicators. I drop that into the spreadsheet, so then I can start to manipulate it based on time of day, price, values of the indicator, lots of different things that I can manipulate, stops, that sort of thing. And my ultimate goal is to maximize either my average profit per trade or my total profit. So what I can then do is look at the reward for risk curve. So the thing that you see here on screen right now is the reward for risk curve based on the changes we just made. All right, we decided we were going to try to maximize average profit per trade and have fewer trades. So the total profit is quite a bit less than it was before, but the average profit is higher. And you can see that we've got a nice steady curve rising up from left to right. Now what this curve is the profit in RR terms for the valid trades each day, added up day by day by day. So if we go back to my daily list here, actually we'll go to the RR side, and I could say on October 12th, the profit for the longs was 2.8. Well, that would be added to the total. On October 15th, it was a -6 on the longs and a +10 on the shorts. So the net gain for the day was 3.91. That would get added to the total. And you can see that any day in black is a profitable day, and then days in red are the negative days. And some days are negative, more days are positive than negative, which is why the curve, or the line here, is going up from left to right. And we accumulate that. And you can see that it's fairly steady. Yes, there's some little pullbacks. And then there's also some times when you get a real steep jump in the curve. There you have another real steep jump in the curve. That's basically when there was market corrections, because my strategy tends to do very well during a market correction. And so, normal market conditions, it's kind of slow and steady, and then you get a correction and it really starts to perform well. All right, so there you can see the performance. And I do that same process whether I'm day trading, which is what we're focused on today, or whether I am swing trading or position trading. I try to take a look at data, manipulate the rules to maximize the value of the data. And whether I'm trying to day trade to make 10 or 20 RR in a day, or trying to swing trade to make 10 or 20 RR in a month, or position trade to try to do that in a number of months. The concept is the same. We focused on day trading this video because I've got lots of data on that. But when I showed you at the top of the video the results for the position trading, same concept. It's the same measure of performance, and those are picks made based on my action break strategy. They're actually put out. I do real-time trade alerts, and those are pushed out to my audience as the trades happen. And those trades from October 1st until the end of October this year, from the start of October in 2017, essentially 1 year, through a correction, actually through a couple of corrections, the net gain in those results is 33.6% for that time period. So the power of data is really what allows us to do that. So I hope you've enjoyed this video. I really encourage you to collect data on your strategies so that you have something that you can play with to maximize either the average profit per trade or the total profit per trade. If you have an interest in learning more about my strategies, I encourage you to visit Stockscores.com, go to the Learn to Trade section. Also, the upcoming events area will have webinars that are coming up. Register for my free weekly email at Stockscores.com. Make sure you subscribe to this YouTube channel. And I really encourage you to also click on the little alarm icon, which will send you email alerts anytime I upload a new video. And of course, if you have a comment, feel free to leave it here. I do read them, and I'll be happy to get a dialogue going with any questions that you have. Hope this video has been valuable to you, and I always encourage you to trade well.